One financial analyst who spent 2 decades studying the markets agreed to a rare on-camera appearance to issue his biggest warning ever. He says the biggest market bubble in history is popping. So you can do nothing or take this one simple step to prepare now. This past winter, he began issuing a big warning about inflation and a looming market disaster. His timing was nearly perfect, but he promises you there's still time to act, to protect yourself, and potentially see some of the biggest gains of your life in the coming years in the right time-tested assets, ones that tend to skyrocket in times of inflation, like hard assets, energy, and gold. He's put together a 5-stock model portfolio, a way to not just beat inflation, but benefit from it. This dead simple one-step investment approach could show you a series of triple-digit gains or higher starting right now. You could set yourself up in minutes and likely forget about inflation, rising prices, or the worst effects of a market crash for years to come. The critical thing is that you act now. Do your future self a huge favor and get the facts free of charge. To watch our full interview for free, simply go to inflationprotection2022.com. Again, that's inflationprotection2022.com to watch our full interview. Hi, this is Daniela Cambone, and welcome back to our summer series here on the Daniela Cambone Show on Stansberry Research. I promised I would be bringing you our hottest guests with the hottest topics. So please welcome back to the show, Mark Yusko. He is the founder of Morgan Creek Capital. Always good to see you, Mark. Hope your summer's going well.
Well, it's great to see you, Daniela. And that's probably the only time in my life I've ever had the word hot and my name used in the same sentence. So I really appreciate it. And it's great to see you again and really excited about the conversation.
Me too. A lot of ground to cover. Now, obviously, people watched our last interview. We focused a lot on crypto. And of course, I want to talk about that with you today. But first, I watched with great interest a few interviews you've been doing where you've explaining beautifully what's going on with the Fed and what we can expect. One thing I want to start with you on today is that you say, stop comparing this inflation that we're living in to the 1970s. There's not going to be a Volcker-like style solution because there wasn't a solution back then. I want to start with this because this is a common misconception we often hear, and I'd love you to debunk it right here, right now.
No, let's go there because it is really amazing to hear people talk about, history rhyming, but not even pay attention to facts. The 1970s was such a very different period in just about every way. Demographically, we had a very young population in the United States coming into their peak spending years. You think about when you're growing up, right? 25 to 45, you're really not very productive the way productivity is measured. You're learning how to do your job, your function. You don't really have a lot of responsibility. You don't have a lot of income. You haven't started your family yet in many cases. So you don't spend as much. It's not until you reach that 45 to 65 period where peak demographics kick in. You have massive spending. 46 and a half is the maximum spending in your life. It's where you got the cars and the kids and the vacations and all the money's going out the door in college. And the other thing you have is a supply-demand imbalance that can trigger inflation. And that's what happened in the 70s. We had a supply disruption in oil, prices went up, and you started to see some inflation. And then you had the problem that Volcker gets credit for, but when you actually, again, look at the data, you're kind of like, wait a second, this is not a good thing. So the way they measured CPI included mortgage prices, interest rates, and house prices. So as house prices started to go up, as more boomers, my cohort, started to buy houses, then interest rates started to rise. So he decided, I'm going to raise interest rates. Well, but it fed into the CPI. So every time he raised rates, the CPI went up, which meant he thought he had to raise more. And it was this cascading effect until, quote unquote, he broke the back of inflation when rates were 20%. And all he did is plunge us into a back-to-back recession in 81 and 83. And people are like, well, that's a good thing somehow. So that's the first thing that isn't the same. Second is demographically today, we don't have demand pull inflation.
Right.
The aging population is downsizing, spending less. The echo boomers are not old enough to be in peak spending yet. So we have massive attrition from workforce population, no workforce population growth. There's no demand pull inflation. What we have is currency devaluation. Mm-hmm. The Fed printed 50% of all the money that's existed in the history of our republic. Think about this. 256 years, half of the money in the past 24 months.
Insanity.
That's what we're seeing. Like, I live in Chapel Hill, North Carolina. Housing prices went up 40% in the last 12 months. Did my house grow? Did it get more efficient? No, it actually wore out. Actually, I had to put money into it to keep its value. What happened is the currency we value it in, the dollar, went down a lot. And it was, oh, no, the dollar's strong. Right. No, it's not. You're looking at DXY. DXY compares the US dollar to the yen and the euro and a couple other things. And the fact that the yen and the euro are even more toilet paper than the dollar doesn't make the dollar strong. The dollar versus the renminbi over the last 2 years is flat to down a little bit. The renminbi is the ascendant currency. The dollar is in decline. It's been the world reserve currency for 70 plus years, but that's rapidly coming to an end. So anyway, more than you wanted for that answer. But it is really interesting how people think, oh, well, we're in the 1970s because oil prices rose. No, oil prices rose because of ridiculous policies by governments to lock people in their homes in response to the flu. That's why oil prices went up.
Okay, there's a lot to unpack here. There's a lot, and I'm excited. Okay, let's just, before we move on from the Fed, you say they didn't create the inflation. They also can't stop the inflation, right? Like, how much can they possibly raise to do this? So how does this play out for you? You know, we're over 9% as we're speaking right now. What are the next steps? How do you see this going on? And for how long?
Now, Danielle, that's a great point. So think about where the quote unquote inflation came from. About half of it was oil prices. Oil prices went from $40, okay? During the lockdown, they troughed around $40. In fact, they went negative for a couple of weeks. But that's because Saudi flooded the market right into the teeth of the downturn. Maybe they actually even had knowledge that it was coming. And they flooded the market. They bought up all the storage in Houston and created this negative price of oil in April of 2020. And then from $40, oil goes to $100 and quote unquote, that's inflation. No, it was $100 before the lockdowns, and it's $100 after the lockdowns. That's not inflation, but it counts as CPI inflation. The other part of it was used car prices. Used car prices went crazy because automakers couldn't get chips to make new cars. Well, why couldn't they get chips? Because again, the world did this stupid, idiotic, maybe one of the dumbest policy decisions in the history of mankind, which is a big statement, I know. And I'm prone to hyperbole, but this might go down as when you destroy economies over a respiratory virus that we've been living with for thousands of years, makes no sense. But maybe it does make sense if your goal is different than defeating the virus. Maybe it's not about the virus. Maybe it's about control. Maybe it's about money. Maybe it's about power. Maybe it's about dictatorships. More on that later. So what happened is most of the CPI increase that is in the past, right? It's already happened. Okay. Oil has now gone from 120 back to 100, and used car prices have fallen 30%. So we're on the backside of the CPI increase. But that's not inflation. How many interest rate hikes are going to solve the chip shortage? How many interest rate hikes are going to open up Chinese ports because of their idiotic zero COVID policy? So we can get containers in there to fill up and come back to fix supply chains. How many interest rate hikes are going to change the price of natural gas going into Europe from Russia? No amount of interest rate hikes can do any of those things. Look at European inflation. All of it, all of the European inflation is gas prices. All of it. And gas prices are because Russia has, we give you most of your gas. You want to sanction us. You want to seize our assets out of thin air. Oh, guess what? We'll just charge you more for gas. Or, even better, we'll threaten to cut off the gas. And then what happens to price? So the Fed can't control any of that. And so the Fed, I believe, is simply trying to reload the gun, meaning put some interest rate hikes on, so that when they acknowledge that we're in a recession right now, right? First quarter was negative, second quarter's negative. We're in a recession. And if they turn it into the Great Depression by over-tightening, because that's how the Great Recession turned into the Great Depression back in the 20s, in the 30s, is by taking liquidity out of the system. Economies need liquidity. And when you take liquidity out, bad things happen. So I think the Fed's making big policy mistake. We'll see how it plays out. But I think they will start cutting before people expect, sometime probably in the fall.
Well, when you hear talk,
probably right around election time, Danielle.
Right? Always the case. Well, when you hear talk of now 100 basis points on the table, what does Mark Yusko think?
I think it's a lot of bluster, right? Again, I think the policy mistake was leaving interest rates at zero, right? Emergency levels when there was no emergency. Back in 2009, there was an emergency. We had the global financial crisis. Cutting rates to zero made sense. By 2013, we were recovered, but we kept interest rates at zero. But why did we keep interest rates at zero? Now, I have a question. Daniel, have you ever borrowed at Fed funds? I haven't. I never get to borrow at Fed funds. I have to borrow at prime or at a credit card rate or at a mortgage rate. Who borrows at Fed funds? The banks. Well, why do the banks get to borrow at Fed funds? Well, here's what they do. The Treasury in the United States and other places, US, Europe and Japan, has this problem. Massive amounts of debt. Massive amounts of debt. They can't pay it back. Right? If you taxed all the wealth in the United States, you couldn't pay back the debt. You can't restructure it because no one would take the other side. Well, in fact, the Japanese and the Chinese are selling US Treasuries. You can't default on it because, then if you're a politician, you lose your job. So what do? You devalue it. So what do you do? You print more money to devalue the debt. But the real problem is all of that debt is causing this incessant desire to keep interest rates really low because the only buyers of debt have been the banks and the central banks. And so here's what they do. The banks borrow from the central banks at zero, and then they buy treasuries at 2-3%. And they lock those in. They lever them up 11 or 12 times and have a riskless trade. Think about that. JP Morgan had 0 negative trading days last year. How is that possible? Who could be that perfect at trading? Well, they're not trading. They're arbitraging. They're borrowing at zero and buying treasuries. Riskless trade. So that was refortifying the balance sheets of the banks that had been destroyed in global financial crisis. So they kept that on too long because it was really good. The Fed was happy, the banks were happy, the executives were happy, the management teams were happy. And then they passed crazy tax legislation to basically say, you large companies, we'll cut your taxes if you do this. How about you buy back your own stock and increase the price of the stock, even though your earnings are flat? And then the people at the top get really rich. So what's happened over the last, really since 1913, and really exacerbated since the global financial crisis, is there's been this giant sucking sound. And that's not jobs going to Mexico. That is the money being sucked up from the middle class and the masses to the very tippy top. Not even the 1%, the 0.1%. And that is the job of the Fed. Everyone thinks the Fed is price stability and job. No. The job of the Fed is to steal money from the masses and give it to the people at the top through this thing we call inflation. Inflation is a hoax. There's no reason that prices should go up. From 1776, when we formed the Republic, to 1913, the price of $1 was $1. Now, why do we even call it $1? Because we borrowed the idea from the Netherlands, from the Rothschild family. The Rothschilds run everything in the world, and they called it the dollar in the Bank of the Dutch National Bank. So we took the dollar, called it the dollar, and from 1776 to 1913, the dollar was worth $1. There was no inflation because we didn't have a central bank to create money out of thin air. Since 1913, as Jay Leno quipped, I heard they were going to make a dollar coin. Well, they already have one. It's called a nickel. So we turned $1 into 5 cents over the last 100 plus years. And so this constant theft, and inflation is theft, as is taxation, this constant theft of wealth from the average person to the elites is the plan. And the more people try to subvert attention away from that and focus on things like, inflation and lockdowns and all these other crazy policies, they're missing the primary objective, which is the average person's quality of life is going down.
Absolutely.
Right? We have the widest income and wealth inequality in the history of mankind. Right? It's never been worse. Now people say, but we've taken all these people out of poverty. True. We took them out of abject poverty and we put them in a class where they have to be solely dependent on the government through handouts. Right? What did they just do in Canada? They just sent people money. Why did they send them money? Well, so they would vote for the people that, if you asked them, they'd say, well, I hate these guys. Well, then why do you vote for them? Well, because I want to get my free money. And that has been the dictator playbook since the beginning of time.
That's exactly what happened. I was going to say, but you mean to tell me, Mark, that the Fed doesn't care about us mere mortal common folk? Insanity.
I know. It's a harsh reality, but look, the banksters, as I like to refer to them, they're going to do what they do best, which is to steal. And look, this has been a good run for 800 years. Your forefathers, maybe the benevolent, not so benevolent Medicis, right, invented this. So for years and years and years, I lent you money, and I wrote down in my book, right, that Daniela owes me some money.
Yeah.
And you had to trust me, right? You had to trust me that I wrote down the right amount. Because what if I gave you $100 and I wrote down 200 and you brought back the 100 plus interest? And I said, oh, no, Danielle, it says 200. You're like, no, I only borrowed 100. Not according to the ledger. So the Medicis came along in the 1200s and said, okay, we'll borrow this idea, steal this idea from this brother, and we'll create dual entry accounting. And we, the benevolent Medicis, Daniela, you keep a ledger, Mark, you keep a ledger, and we will arbitrate who has the right number for a small fee. Okay, so fine. So for 800 years, that's been a pretty good system until 2009, when Satoshi Nakamoto, whoever he, she, they are, came along and said, well, we don't need you, Medicis and Rothschilds and JP Morgans anymore. We, software, code, can determine truth. So we don't need to trust each other anymore. We have truth. We know, based on the ledger, that I lent you $100, and that's truth in the ledger system that is Bitcoin and ultimately other digital assets.
Before we move on from inflation, just one point you brought up about inflation being a hoax, because I read a great article about how it's almost like this self-manifestation we've created of inflation, where we keep talking about how inflation is, how everything is so expensive, so stores are preparing, they're increasing. So how much of this inflation, and I know it's a difficult question to answer, is really real? Really real?
Well,
or
it's real. It's a really, really important question. It's real in the sense that if you go to the grocery store, things cost more. Okay, but why is that? Is it because there's limited supply, right, and excess demand? In most cases, no. We have, in most cases, plenty of food. Although there's this interesting thing happening. There's these bunch of random accidents in food preparation plants and processing plants all around the world, which is kind of weird. And then we have the attack on farmers, like passing rules that they have to do all organic stuff. I saw Russell Brand do a rant on that. And then you got the stuff going on in Ukraine with the breadbasket of Europe. So there's some funky stuff going on with food, but by and large, there's plenty of food, right? I marvel, Danielle. I live in a country, in the United States, where it amazes me, and this is one of my personal pet peeves, right? Our country spends $20 billion a year on weight loss. And yet we have millions of kids that go to bed hungry every night. How can that be? How can that be? We have plenty of calories, clearly, because people are consuming too many of them and need to pay to lose them. So how can that be? Well, that goes back to the few and the masses. People don't care about the masses, as long as they get enough for themselves or maybe too much for themselves. So I think the issue here is it's not demand pull inflation.
Yeah.
It's currency devaluation. And currency devaluation is different. The fact that something costs more because the dollar has been devalued is very different than inflation. It still gets counted the same as inflation or CPI. But the reality is it's kind of when, not to make it all about crypto, but when you talk about Bitcoin, right? One Bitcoin equals one Bitcoin, just like $1 equals $1. But we never talk about currencies in their own native state. We talk about them in some cross, right? We talk about dollar yen, dollar euro, dollar loonie. We don't talk about the dollar as a dollar. And same thing with Bitcoin. Bitcoin actually, right, has done exactly what you would expect it to do. The Fed printed 50% of all the dollars, and Bitcoin over that 2-year period is up 100%, right, from 10,000 to 20,000. Now it's a little bit higher than that. Okay, that's exactly what it should have done, because it's not the Bitcoin changed. One Bitcoin still one Bitcoin, but the currency went to 50 cents. 1 over 50 cents is 2. So it doubled. And so the Bitcoin per dollar went up, just like my house went up, not because the house got better, but because the currency I value it in got worse.
Want to talk a little bit more here about the US dollar, because you're right. We see the headlines. I'm a culprit as well. The narrative is, oh, the US dollar is so strong. But you're right. We're nowhere near the all-time highs. We are, yes, at a decade high, but it's just the strongest horse in the race, basically, right? So
well, it's the least weak of the major currencies.
But is this the narrative? I mean, is this the optics that the Fed wants to push, though, right? Because everyone's going around saying U.S. dollar strong, U.S. dollar strong, U.S. dollar strong. So we're believing this.
100%. And if you go back in time, this is amazing. It's all driven by WEF. And every year at WEF, the central bankers get together and they decide who's in the hot seat, right? Who has to be the strong currency this year? Is it the yen? Is it the euro? Is it the dollar? So last year, it was the yen. The yen was really strong. And I was like, why is the yen strong? Everything's bad. They have way too much debt. But the yen actually went from 100 to 100, from 108 down to almost parity, back to 100. I was like, that's weird. How could that be? Well, it was their turn to be in the hot box, because if you are a country that relies on exporting, that's all of Europe, right? They rely on exporting to China. If you're the US, you now rely on exporting goods to the rest of the world, because we produce a lot of oil along with Saudi. And if you think about it, what you want to be is a currency manipulator. You want your currency to go down so your goods are cheaper around the world. Now, if you want to consume more, if you want to buy things, you want your currency to be strong. So really, Japan should want their currency to be very strong because they have to import a lot because they're an island nation. And China should want their currency to be very weak because they supposedly are the manufacturing powerhouse of the world. But here's the thing. That's 20 years ago narrative. 20 years ago, it was about made in China, right? Pick up anything. My friend, his daughter came to him, this was 10 years ago. He said, Daddy, I thought you said Santa Claus brings the presents. He's like, well, honey, he does. Why? He says, well, why do they all say made in China? And so 20 years ago, it was about cheap goods, labor arbitrage, made in China. Today, it's about made for China. China took 700 million people out of abject poverty over 30 years and created the largest middle class in the world, bigger than the European and the US middle class put together. And that middle class now is the greatest consumptive force in the history of mankind. So what you want is to sell stuff to them. So what's Russia doing? Selling them stuff. What is India doing? Selling them stuff. What is Africa doing? Selling them stuff. What is China doing? Bringing it all in. And their currency is gradually strengthening. And so we sit in Washington and call China as a currency manipulator. You look in the mirror, right? When you point a finger, 3 pointing back at you. It's us. We, again, it's like Pogo. You're too young to remember, but there was this cartoon when I was growing up called Pogo. And the guy used to say, we've seen the enemy and he is us,
yes.
Right? We are our own worst enemy. And all of this is interconnected. And so the reason the dollar narrative is that it's strong is if you tell people a lie often enough, some of them will actually believe it. Now, I would say if you say a lie over and over and over again as if it's the truth, it's still a lie. So it's a lie to say the dollar is strong. It's strong relative to the yen and relative to the euro, which are toilet paper. It's not strong versus gold. It's not strong versus Bitcoin. Other stores of value are better than a currency which can be created out of thin air.
In the past, you've said you wouldn't be surprised if the Chinese renminbi would replace the US dollar as the reserve currency. Do you still believe that?
I do.
And how, but
not tomorrow. Not tomorrow, right. But remember.
But at what point?
The pound sterling. Oh, no, just a little history. The pound sterling was the world reserve currency, right? From the 1860s until 1940. Well, wait a second. How did that happen? Okay. In 1913, right, sun never set on the British Empire. They were in charge of the world. They had the most powerful navy. They were the kings. The pound sterling was the world reserve currency. Dollar was toilet paper. We were an emerging market run by a gang, right? This is pre the Roaring '20s. And what happened? The UK invaded Mesopotamia, incurred a bunch of debt. The pound sterling collapsed. The dollar ascended. After the First World War, again, happened the year after the Fed was created. Little interesting tidbit there, maybe why. And the dollar ascended. And so then it took 30 years from 1913 to 1940 at 1944 with Bretton Woods, that the dollar became the world reserve currency. So that process has started. The renminbi has been added to the SDR. Okay, it's part of the global set of, it is a reserve currency today. It's not the reserve currency. And historically, reserve currencies were relegated to countries who had the most powerful navy. So in the olden days, in the 1400s, it was Portugal, because they had the tallest trees, fastest ships, because they had the tallest masts. Then Spain took over Portugal. They had the tallest trees. They became the world reserve currency. Then France took them over. Then the Netherlands, because of the Rothschilds and the Bank of the Netherlands financing their wars, took over. Then the British created the steam engine. They took over. And then we created nuclear power. We took over. And it was because we had the strongest navy. But in the future, it's not about naval superiority. The next war will be fought with chips, not ships. It's about superiority in 5G, AI, and technology. And that's what China is killing everybody in the world. They have 96% of the citations on AI. They are killing it in 5G. 5G standard is a Huawei standard, not a US company standard. That's why they detained the Huawei person in Canada, because they're trying to stop that dominance. And so all of this is part of a 30-year plan. This is the difference, right? American politicians think in 2-year cycles. How do I get reelected? And I got to start getting reelected for my 4-year cycle 2 years in. Chinese think in 30-year plans. So from 1990 to 2020, they had a 30-year plan, a harmonious rise. They wanted to become a moderately prosperous socialism economy. Not even very threatening, kind of nice. And they moved 700 million people out of poverty into the middle class. The next 30-year plan, from 2020 to 2050, is to become a great socialism economy, to become a dominant superpower. And I believe sometime over the next 20 years, the renminbi will be the world reserve currency. And then after that, we'll go to crypto.
As Mark Yusko, an American citizen living in the US of A, does that not concern you? Would you rather not see the US dollar continue to be the reserve currency of the world?
No, world reserve currency is an overrated thing, right? London, which I was just there. I was telling you the story that, 3 years ago, we asked our son where he wanted to go on vacation. He said, Canada. We're like, Canada? Why Canada? He said, well, it's a foreign country. It's closest one. That's where I want to go. So we went. We had a blast. Went to Toronto, went to your hometown of Montreal. Loved it. One weird thing. No one honks their horn. I thought that was really strange. It's just really weird. No one ever honks their horn. Nicest people I've ever met. So this year, we asked him, where do you want to go on vacation? He's like, London. So we went to London. And so we went over. And London, right? No world reserve currency since 1944. Still, maybe the greatest city in the world. I mean, that's a strong statement. There are a lot of great cities, but I love London. I mean,
Yeah.
I love it. And we actually went to Wimbledon, which I'd never done, and it was a blast.
Wow.
Now I understand why people go.
Cool.
And then we took a train up to Scotland, and then we went over to Dublin. We just had a great little trip. But London is an awesome city. The UK is still a really important country, great place to live, great quality of life. They don't have the world reserve currency. So what? And the US cut a deal with the Saudis in the 1970s to become the world reserve currency because of the petrodollar standard. But that's now shifting because now it's like, he who has the gold makes the rules. Who has most of the hydrocarbons? Well, Saudi and Russia. And who needs all the hydrocarbons? Well, China. So what happened? We sanction Russia, the US does. And what do? They turn around and cut a deal with China. Now China will buy all their oil because China needs a lot of oil, right? China needs to have enough oil that's equivalent to 3 Saudi Arabias over the next 50 years. It's a lot of oil, right? So they're going to buy Russian oil. So now you're seeing this interesting axis being formed between Russia all the way down to China, including Africa, including India, including Southeast Asia, Indonesia. And all of us are sitting there wringing our hands saying, well, why is that happening? Why aren't our sanctions working? Why is the ruble the strongest currency in the world this year? It's supposed to be down because we sanctioned it. Because the rest of the world is waking up that maybe we don't need to price everything in dollars. 8% of global trade is with the United States. Yet up until a couple of years ago, 60% of global trade was denominated in dollars. And that made basically emerging markets debt slaves to the IMF and the United States because they were issuing in the currency in dollars, and then we would change monetary policy and destroy their currencies and destroy their economies. So Brazil and Venezuela and Argentina and Turkey and all these things, their currency gets absolutely wrecked. So what do people do? They move out of those currencies into hard assets, gold, silver, Bitcoin, and preserve some of their wealth. And now these other countries are realizing the game, and they're like, you know what? Maybe we don't need them to be the world reserve currency. Maybe we don't need petrodollars. Maybe the world isn't going to be like the industrial age. Maybe in the knowledge worker age, we need a different set of rules. And so I look at it as a citizen, and I'm like, look, my life is still pretty good. Good place to live. We got good healthcare. We got good transportation and good roads, especially in North Carolina where they spend a lot of money on roads. I don't have to worry about Scud missiles flying over my head because we have a defense budget. But that's not necessarily dependent on having the world reserve currency. Now, what is dependent on having the world reserve currency is financing all the crappy companies that pay all the bribes, call it lobbying, into Washington to stay alive, right? Everyone lets the bad companies exist by borrowing at too low interest rates. So one thing I will applaud the Fed for doing is finally getting interest rates back to a level where the companies, 40% of the companies in the S&P 1500 can't service their debt, Daniela. Forget paying it off. They can't even pay the interest on their debt. So these companies need to go away. And it says, Mark, that's harsh. Like, recessions are good, right? They're not good for everybody universally, but they're good. They're like winter. Winter is necessary. We need certain things to die. We need the weak plants to die so the strong plants can survive. We need the weak animals to die so the strong can survive. And that's a horrible maybe thing to say, but we need bad businesses to die so the strong ones can thrive. And that's always been the way. But when you mess with that by manipulating currencies and manipulating interest rates to let everybody win, like I just read this, that some family donated $300,000 to the governor of New York. And she handed their company $1 million contract on no bid because it was under emergency use authorization. Are you joking? That is graft. That is corruption. That is wrong. On every level, that's wrong.
Yet it
but
goes
that's
on
the way we set it up to work. And until someone steps up and fixes it, which I'm not sure there's any incentive to do that right now, we got to deal with it. So people say, well, if you hate America so much, why do you live there? I don't hate America. I don't hate the dollar. I don't hate the government. I acknowledge the flaws, but quality of life here, still pretty good. And they haven't forced me through excessive taxation, although it's pretty excessive, but they haven't forced me yet to move to some other place. So I'm still here.
I guess before I want to move on and talk about crypto with you, but before we do, just one final point on reserve currency. I guess the question is, can you still be a superpower without being the reserve currency of the world? And just get your thoughts on Putin's comments regarding having a basket of currencies among the BRIC nations. Why could you not see that becoming the reality?
It's a great point, and that's probably the way we head in the near term, and it's a great differentiation between a superpower and the superpower, right? Really, for the last 40 odd years, maybe even 50 years, we've been in a uni superpower world, right? Since the end of the Soviet Union, it's really been the US as the dominant superpower. And when there's one superpower, things can get manipulated even worse than normal. And because there's no détente. But there actually has been détente. Think about this. When countries would threaten dollar hegemony, right? Basically the petrodollar system. So let's look at the first one, Iraq. Saddam Hussein says, you know what? I don't want to pay for oil in dollars. I'm going to pay in euros. He vanishes. Gaddafi says, I don't want to pay for oil in dollars. I want to pay in gold. He vanishes. Russia and China say, I don't want to pay for oil in dollars. They don't vanish. Oh, they have nuclear weapons. So there is détente. There are three superpowers, right? There's one superpower, but there are two other superpowers. And people say, oh, Russia's not a superpower. China's not. Well, they got nuclear weapons. And if you have nuclear weapons, you have détente. And so now China and Russia denominate oil transactions not in dollars. And the US doesn't like that. But they can't do anything about it because you can't, thankfully, please, let's not go down the path of nuclear. Although I saw a crazy article the other day. There's actually an ad running in New York City, Daniela, saying, in the event of nuclear fallout, go inside and stay inside. I'm like, are you joking me? Why would you run that ad, first of all? Second of all, going inside a building isn't going to help you. So, it was crazy stuff. But that aside, I don't really think we're going to have a nuclear war. But the reality is that détente is real. And so, to answer your question, could the US still be the superpower if we lost world reserve currency status? No. We'd be a superpower. But would it be okay for China to become the superpower and have the world reserve currency? As an American, probably a lot of other people would say, I don't like that. I don't want that. I don't trust the Chinese. Well, I've been going to China since 1996. I haven't been there for a couple of years because of their crazy lockdown policies, but I'm traveling there since 1996, and a lot has changed. It's a pretty vibrant place. You go to Shanghai, city of 44 million people. What other city has 44 million people? It functions really well. It's beautiful. It's gleaming. Food's great. People are great. People are employed. And then you got high-speed rail. There's more high-speed rail, I think, built every year in China than all the high-speed rail that exists elsewhere in the world. It's just crazy stuff. So I think people have a perception that maybe isn't, it could all be solved with travel, right? The more you travel to other places, the more you see other places, and the more you appreciate other people's perspective and walk in their shoes, the better off I think you are. But we sit in our own place and we listen to media and we listen to the propaganda, because it's really propaganda, that tells us that Russians are bad and Chinese are bad. I'm not sure that's a true statement. Are there bad people in Russia and bad people in China? Are there bad people in America, bad people in Canada? Sure. But I think generally speaking, people are good, most. And I think it's a long, winding answer to your question, but it's so important to think about not in terms of singularity. Like there doesn't need to be one policeman of the world, right? I find it abhorrent that we sent $40 billion to Ukraine. We have people starving in America. We have people who can't afford a basic education in America. Why do we spend $40 billion to Ukraine? And the problem is most of that money, unfortunately, where's it going to go? It's going to go into companies that I will bet you are partially owned by people that sit in American government. Just like every other pork project that we've sent around the world.
Because
and so
life is all about optics, right?
Exactly. The thing, whatever the thing is. And look, people say, oh, isn't it bad that Russia invaded Ukraine? I'm like, sure, but it's bad that we invaded Iraq twice. And it's bad we invaded Afghanistan. And Afghanistan has been invaded by Russia or the United States like 70% of the years since 1900. I mean, it's some crazy stat like that, Danielle. And it's like, why does that happen? Or why does Russia go and drop bombs in the desert in Syria? Like, well, because it increases GDP. Why do we send Tomahawk missiles into Syria? Remember the first thing Trump did? He sent 200 Tomahawk missiles, didn't hit anything, literally didn't hit anything. But that was millions and millions of dollars to defense contractors, and it created GDP. So the military-industrial complex that we've been warned about since the 1930s is real. And there's nothing I'm going to do about it to change it, but I can at least acknowledge it and not pretend that it doesn't exist. And, people say, well, you shouldn't say things like this because, you're going to get audited or something. Look, it is what it is. And I don't know that I'm saying anything that's really that controversial. Maybe people don't like to hear it, but we exist in a world that's run by a very small number and set of people. But for the most part, the average person's life is still pretty darn good. Now, the people below average, not really that great. And that's where I think we can really help if that were the goal, but I'm not sure that's really the goal.
Mark Yusko dropping truth bombs. I want you to stick around for part 2 because we didn't get to the cryptocurrencies yet and gold. That wraps part 1 of my conversation with Mark Yusko. Be sure to stay tuned to part 2 where we get into the cryptocurrencies, precious metals, and so you don't want to miss it. So be sure to stay tuned to Stansberry Research and sign up at danielacambone.com so you can stay on top of all these amazing interviews. Hope you're enjoying the summer series. I am, that's for sure. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.